I welcome you guys to another episode. This is episode 4. Today we're going to be talking about market cycles. Now, I need you to understand that price moves in cycles, just like how every other entity moves in cycles. Like we have different seasons. We have autumn, spring, winter, and summer. In Nigeria, we have rainy season and dry season. There are different cycles in price movement. Understanding each phase in the cycle is essential for predicting price movement. Now, what are these phases? We have consolidation, expansion, retracement, and then reversal. All right. With each phase, a trade idea can be generated. And we do this by pairing each phase of the cycle with a reference point. We have every phase in price cycle listed out here, and they have certain reference point that you can pair them with. Now, this is the only phase we don't take trades. Now, every video I'm releasing henceforth will be explaining each of those phases in the cycle. So for a consolidation, we pair it with equilibrium. Expansion is paired with order block. Retracement is paired with fair value gaps, and then reversal we pair it with liquidity pool. All right, so just for us to have an understanding of what these terms mean, consolidation is very simple when price is moving in a range, and then expansion is when price expands higher or expands lower. Then retracement is after an expansion, you see price correcting down into the price range created, and also for a bearish market when we see price correcting into this range. And then reversal, we have price moving higher, takes buy side liquidity and then reverses, or we have price going lower, takes sell side liquidity and then rallies higher. So at this point, I'm sure we have an idea of what each of these phases in the cycle means. Okay. Having this information, you realize that understanding each phase of price cycle, its characteristics and how it moves from phase to phase, each reference point and how they look in price forms the foundation for a trade idea. Now, the market cycle comprises of expansion, consolidation, reversal, and retracement, like we said before. But I'd like you to understand that price always starts from consolidation. This is when price is quiet, like I would like to call it. And after consolidation, expect an expansion. Now, price does not move from consolidation to reversal, consolidation to retracement. No, it moves from consolidation to expansion. So when you see price consolidating, the next thing you are expecting is an expansion. Now, I failed to mention that these are the only 4 things you see in price. When you go to your chart, price is either doing either of these 4 things. It could either be consolidating, expanding, retracing, or reversing. These are the only things price do. So if you understand how to identify these phases in the cycle, its characteristics, and how it moves from one phase to another, you're able to have a sound foundation in predicting price direction. So like I mentioned before, price moves from consolidation to expansion, not consolidation, reversal, or retracement. Whenever you see consolidation, the next thing you should expect is expansion. Now, it's from expansion that things get complex. From expansion, you could either have a consolidation, you could either have a reversal, you could either have a retracement. So what do I mean? You can either see price breakout from a consolidation like this, and then consolidate again before expanding, just like we see here. Price will either consolidate, expand, or then consolidate again. Then price will either break out from a consolidation like this, and then retrace like we see here, and then expand again. So price could consolidate, expand, retrace, and then expand again like we can see here. This usually happens in price action. Another scenario that could happen is price breaking out from a consolidation. We see price expanding and then reverses. And each of these phases in the cycle are paired with particular reference points. Like the consolidation is paired with equilibrium, expansion is paired with the order block, retracement is paired with liquidity void or fair value gaps, and then retracement is paired with liquidity pools. Now, every of these cycles will be explained in a single video, but today we're talking about consolidation. Now, you will note that some things are not possible. You cannot see a retracement and then a reversal. You don't see price moving, let's say after an expansion, it retraces and then reverses. This, like, it doesn't make sense because the whole concept of reversing is price taking liquidity and then going the other direction. Or to put it this way, price is rallying higher, it takes out the buy side liquidity and then reverses. This is an example of reversal. Or for a bearish market, price is rallying lower, takes out sell side liquidity and then reverses higher. So reversal is when price is bearish, it becomes bullish, and when price is bullish, it becomes bearish. So you don't expect a reversal after a retracement. It's not possible. And then you don't also expect a consolidation after retracement. It does not happen. It's either price expands and then consolidates, or expands and then retrace. So when you see something like this, and then price is consolidating, you don't call it expansion, retracement, consolidate. No. After a retracement, you don't expect consolidation. This is simply expansion and then consolidation. I probably might give another leg higher. But you don't expect consolidation, retracement, but you only expect an expansion after a consolidation. Many people mistake a move like this. We have the high, the low. Price takes this high. That is the buy side liquidity and then rally lower. Many people mistake this as consolidation and then reversal. It's not, this is not consolidation reversal. This is consolidation expansion because price expanded and then reverse. So I hope this is clear. So when you go to your chart, what you want to look for is consolidation. This is when the market is quiet. This is when orders are being built. The market phase we're going to be talking about in this video is consolidation. We're going to understand how to identify it and its characteristics. Consolidation is simply price movement within a range in price. This is when market is building orders and about to take a direction. Consolidation is the starting point before an expansion. Amongst every other price cycle, this is the only phase where you wait and not take a trade. So you can see an example here. You will know that price was neither bullish nor bearish. And the idea of trading is to buy low and sell high, or to sell high and buy low. But in this market condition, we're not given any of those opportunities. So what do? We sit down and wait. But that's not all. There's a way we can use this to our advantage, and I'm going to be showing you shortly. To use this, you have to be able to identify price consolidations. How do you do this? You mark out the swing high and swing low of the range. Now you notice that price was neither taking this high or this low. See how price was moving in this range. The swing high, the highest high formed and lowest low formed, gives you the area of consolidation. All right, so let's look at an example here. Let me find something. Let's start from here. Good. Now, if you look at price, what phase is this? This is looking like an expansion, a consolidation. You are not sure. Now, before we move on, I would like you to understand that each phase of the price cycle is dependent on the time frame. An expansion in a 1 hour time frame might be a consolidation in a daily time frame. So when identifying each price cycle, you want to consider the time frame. So we're using the 4-hour time frame. Where do you think there's consolidation here? All right. So like I said before, you want to identify the swing high here and the swing low. So here, market has been consolidating within this range. And we can see a liquidity sweep here before price continued rallying higher. So the highest high formed and the lowest low formed. This is a price range. And when you note that price is unwilling to break out from the range recently formed, you have a consolidation. So this is the time to sit on your hands and wait. And you have to understand that immediately after a consolidation, what do you expect? An expansion. And you can see our price expanded higher. So if you waited for this, you'll be getting an expansion. So you can use this to time an expansion. And already we are bullish. So any run on this low will give you an idea that price wants to take what? Liquidity before running higher. So price first expanded lower before expanding higher. Okay, let's look at another example. Let's take this out. You can see this swing high and this swing. This is the highest high formed and lowest low formed, this range. And you can see how price was ranging within this range. And then it broke out. Now, I want you to also take note of something. Whenever price breaks out from a consolidation, it usually returns back to that consolidation. So we can see here, price returned back to this consolidation. Okay, let's go forward. You can see another example here again. It's very small, tiny, but it's actually a range as well. So price was consolidating here. So how to identify the range? You want to pick the highest high and lowest low formed. So you can see there's a swing range from this high to this low. Then price created another swing range from this high to this, from this low to this high, and then did another range here. This is a retracement, and I did another one here. So you can see this is a consolidation. You can see how price found resistance, went back into the consolidation before running lower. Okay, let's see. Okay, this is another good example. This high and here. So price created this swing range from this low to this high, and then created another range again. So this high to this low, this is another new range. You can see how price has been consolidating here. Now, normally, this is actually the range. If you look at it here, this is actually consolidation. But we want to be precise. We don't want to just use anyhow. You just like, how do you make this objective? So we're trying to make this objective as possible. So we can see the range high and the range low here. Now, when you identify it, because you don't want to be trading in this range, you want to wait for price to break out from this range. My network. Like I said before, you don't want to be trading when price is ranging. So if you're thinking, how do I know when it's going to break out? That's not your concern. That should not be your worry. Allow price to break out first. You can see that as soon as price breaks out from every consolidation, it usually returns back to it. You can see the return, and we see another example here. See how price returned. So don't be worried. Okay, how do I know the range high, range low? We're not breakout traders, guys. We wait for price to break out from the range. We don't pursue expansion. We allow price to expand. Look at how it's expanding, and then look at how price returned back to the point of consolidation. Give us an opportunity for a sell. So let's move forward. Can we get another example? We get at least one more. All right, look ahead. You can see this price high on this low. This is another range. You can see how price created this range. And then it broke out of it. This is the high, this is the low. So it was ranging within this range. As soon as it broke out, this is a breakout. You can see that it found support. And then, right, although price was, you don't just wait for price to find support, then continue. Right? No, we want to also use context. I'm not too concerned about knowing if price returns, if it will continue going higher, like we see it. You can see price found support, but just gave a little move higher and then broke below the low. So there are concepts I will be teaching you that will help you refine these trade ideas for a profitable setup. What you need to be concerned about is how to identify it and note its characteristics. Okay, we can see another consolidation here. So price created a range here from this high to this low. And we can see as soon as, okay, let me draw it well. You can see as soon as price broke out from this consolidation, you can see how price found support before rallying higher. Let's move forward. Let's look for more examples. I think 2 more examples and we'll be done. So we can see another example here. This range high and this range low. You can see how price was consolidating here. So after creating this range, price refused to leave this range. So we're expecting that once a range has been created, either the low or the high should be taken. But you can see that price is neither taking this high or taking this low. As soon as price broke away from it, you can see how price returned back toward this consolidation before running lower. Okay, so let's look for one more example. Let me just take this out so it doesn't mess up the chart. Let me look for a very astounding example. Let me just look for a very good example. Okay, here's a good example. So you can see this range high and this range low. Price was now you don't just normally you can see how price started forming this consolidation from here. But like I said before, you want to be objective, you want your chart to be neat, to take away confusion and subjectivity. You want to identify the range high and the range low. And you can see as soon as price broke out of this range, so I will just put this back so that we can see how this formed a consolidation. But mind you, we're using the range high and range low. We know that this consolidation has ended when the range high or range low has been breached. So you can see how it was breached and look how beautiful price returned into this consolidation before. Now I'm going to be explaining this whole concept in the next video when I talk about expansion. How do you use expansion with another block? Expect price to consolidate immediately after a huge expansion and to expand after a significant consolidation in price. All right, let's look at this example here. Now you'll notice something. After consolidation, what happens? Expansion, consolidation, expansion. So let me not mess this up. What can we see here again? Consolidation. After consolidation, expansion. Now, whenever price expands, don't rush to the market because usually after an expansion, there is what? Consolidation. So those who have less knowledge, the newbies, the inexperienced traders, when they see this kind of move, they are like, wow, time to make money. And then they jump in. After doing that, they get caught up in this move here. You can see how price they don't move. And then they will now come out of the trade because they are tired. After coming out, what happens? You can see how price expanded again. So without this information, we mess into the trap of messing up our trades. So you now as an informed trader, once you see an expansion, you wait. You don't rush into the market. You wait for what? Consolidation. In fact, that's the best time to trade. Whenever you see a consolidation, is the best time to get ready to trade. because consolidation signified build-up of orders. All right, so you can see how price consolidated before expanding, and then we can see another consolidation here. Let me just highlight it. You say this is the highest high formed, this is the lowest low formed. So price was ranging. You can see it expanded lower, took out liquidity before rallying higher. What do we have here? Another consolidation, price expanded. Then we have consolidation here, a little bit consolidation, price expanded. Then we have small consolidation here, very tiny, price expanded. And then we have another consolidation here. This is the range highest high formed. Sorry, let me draw it well. Let me use black. This is the highest high formed and the lowest low formed. You can see how price was ranging. So here is what? Liquidity. Price took out what? The liquidity. This is an expansion higher and then reversed. We call it reversal because price went higher, bullish, and became bearish. So we can see this expansion lower after expanding, price consolidated and then expanded. So this is price cycle. This is how price moves. Price consolidation is most likely to occur at equilibrium. Equilibrium is the midpoint from the range high to the range low in price. Price at equilibrium is fair price or fair value between buyers and sellers, like I mentioned in the previous video. So let's look at an example. So you can see that from this range high to this range low, we have an equilibrium. Now, I explained that you want to pair equilibrium with consolidation. That's why you find consolidation. Price consolidates usually at an area of equilibrium. So if you draw from this range high to this range low, now you can see that I was using the bodies here. I used the bodies, the lowest low formed, the lowest body formed, and the highest body formed. You can see we got what? Equilibrium here. See how price consolidated at this point. Now, this is just the previous slide we looked at this point. So if you draw it from here to here, you can see that equilibrium was happening here. That's why you want to note where you are in price. Usually, when price at equilibrium, you want to sit on your hands because price usually consolidates at equilibrium. So you don't just go to price and then try to take trade anyway. You want to identify where are you in the current price range. All right. So you can see here, price was consolidating at equilibrium. Here's another good example. I was using the bodies, not the wicks. A lot of the volume is at the bodies. So you can see how price was consolidating here and here. Now, the next slide expand these areas into smaller time frame. So let's take a look at this area here in the smaller time frame. Now you can see how price consolidated here. To identify the range, you can see this is the highest high formed and the lowest low formed. Now, I wanted to also note that not always do price return back to an area of consolidation, not all the time. But majority of the time, you usually see a return back to what? An area of consolidation. So let's take a look at the next area. So this is the second point marked out. You can see how price consolidated. This is a swing high formed, swing low formed. This is a range, sorry. And the swing low formed. So this is a range. You can see how price was ranging within this range. Yeah, this is what market consolidation. You can see how price expanded, took out the buy side liquidity, and then reversed. Now take a look at something here. You can see how price was finding resistance, support, 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 resistance. To tell you that the equilibrium, the line of equilibrium is not random. Price usually gravitates towards the area of equilibrium. It's sought to serve as a point of magnet. You can see how it was attracting price. Here, in conclusion, consolidation is price movement in a range with no clear directional order flow. When price is consolidating, you wait patiently, not trade. Significant moves occur after price consolidation. The only next price phase after consolidation is expansion and expansion only. Price usually consolidates at equilibrium, also called fair value. Now, here's what I need you to do. Go to your charts, outline 5 areas of consolidation of any pair of your choice. Point out the range high and range low. Share this to the discussion group when you're done. After doing this, identify an area of price consolidation before you break out in a 15-minute time frame. Take your time to watch and observe how price breaks out from these consolidations. Does price return back to the consolidation and create another leg or not? So I hope this lecture was helpful. I want to encourage you to just do as pointed here. Practicing in the chat is what gives you the skill, not these videos. So as always, I wish you a good luck and good trading.